Hello and welcome to Mining Network. We're joined today by two distinguished guests. First of all, I'll introduce Colin Bennett, who is the Market Intelligence Director over at the ICA, or the International Copper Association. For those of you not aware of the organization, they're a non-for-profit group who bring together the copper industry and its partners to make a positive contribution towards the UN Sustainable Development Goals and support markets for copper. We're also joined by an international boutique management consultancy company focusing on mining metals and diamonds, and their clients include major mining companies themselves, juniors, investors, and market organizations. And that is, of course, Christina Carmen-Schuller over at DMM Advisory. So first of all, thank you both for joining the program. It's one of the hottest metals in the market at the moment. The price of copper has been trading around the $4.5 per pound mark, which is phenomenal considering where we were even just a year or two ago. So there's a lot of momentum at the moment. I think it's a really great time to be talking about this. We are going to be doing things a little bit differently. Fortunately for us and the viewers, Colin and Christina have put together a couple of slides just really highlighting the key areas that we think people should be really paying attention to. So Colin will be looking at the recycling side to copper, along with the supply fundamentals coming through with new projects or expansions on projects. And Christina will be running us through the energy transition, the demand fundamentals around copper, as well as potential for substitution as well. And then afterwards, if we have some time, we'll run through a few questions that are pressing at the moment as well. So it's going to be a pretty interesting session, and we'll kick things off with Colin.
Thank you for the invitation to speak today. As an association spokesperson, I will adhere to antitrust throughout this session. Next slide, please. Most of the work that you're about to see was commissioned by ICA in various years. It was conducted by independent organisations with high research standards. Further information is publicly available on the ICA website. So jumping in now and looking at the circular economy for copper. In an increasingly ESG-focused world, it's important for us to note that copper has its own circular economy, and the copper circular economy is global in nature and material is moved internationally on a daily basis. Also, it's important to note that in the flows shown here, each year copper recycles as much material as it possibly can. Indeed, in the real world, the only real short-term way to increase recycling is to increase recycling capacity itself. Also, for the longer term, the key to increasing recycling is thought to be through increased widespread regulations, which will enable increased tonnages back into the system. Regulations which cover consumer-side scrap, industry scrap, tramp elements, and international scrap handling might be enabled to speed up the various global and local processes. More and more, industrial symbiosis, which in part covers the use of copper byproducts such as tailings, is increasingly forming part of the copper circular economy story. Industrial symbiosis is enabling copper to be an even more sustainable material. Work commissioned by ICA reveals the opportunity in IS, and more information is available on our website. Next slide, please. So not only is copper used in a very wide range of products and markets, which support all of our societal needs, copper demand also has a complex of stocks and flows behind it. We can see here the actual numbers behind the flows on a global basis, from supply to scrap and recycling. Note the volumes of scrap in green being used in the system, recovered from the full process, which begins with virgin material supply from industry. The stocks in use square at the bottom is all of the things that are in use and that use copper. At ICA, we call that the urban mine, some 450 million tonnes. Copper is infinitely recyclable, therefore this cycle rolls on year after year. and copper is mined once and recycled forever. Next slide. Drilling down further now, this is a view of China stocks and flows. Note the addition of various import and export channels at most stages compared to the global picture. And this chart highlights how complex it is to track material movements in the large demand copper market. Typically, demand is around 13.5 million tonnes per annum in China, the largest single country figures in the world. But in spite of China being the largest demand geography, it benefits from the lowest level of substitution compared to all the other regions and geographies. And this is due to China pursuing top specification in its various building out, including electrical grids and equipment such as transformers and motors. Next slide. I've been asked to mention the supply in this presentation, and I'm pleased to show my go-to data to cover the immediate issue of supply. And in fact, this also covers capacity. So this information is from the International Copper Study Group, which is a UN body. While the data show planned capacity supply, of which the data is provided directly to the ICSG from miners, there is clearly a heavy weight of supply planned to enter copper flows in the coming years. And from this data, it is really hard not to think that suppliers are doing all that they can to provide for the market. Next slide, please. So in addition to the capacity supply bubbles in the previous chart, here's a rarely seen view of the technological processes that will be used to bring supply to the market. For the uninitiated, SXEW stands for solvent extraction electrowinning. It's a process. So the attractions of copper SXEW are various for both large and small suppliers, and broadly it's said to enable high purity in a range of mining process settings. Moreover, the chart shows the planned growth in capacity at a number of named mines. Next slide, please. So the future availability of minerals, which is connected with supplies, is based on the concept of reserves and resources. And reserves are deposits that have been discovered, evaluated and assessed to be profitable. And this is really what mining is about. It's about assets becoming profitable and moving into that gap once exploration has been finished. And global copper reserves are estimated at 870 million tonnes. And annual copper demand is around 29 million tonnes. So you can work out the figures. Current copper resources in the earth, the really big number, are estimated to exceed 5 billion tonnes. And this is all according to the USGS, the US Geological Survey. Therefore, as far as anybody can tell, we will not run out of copper. However, the strong availability of material in the earth does not prevent short, medium and long-term speculation on the supply-demand balance. And with that, I will pass the floor to Christina.
Peter, thank you very much for inviting me to share my view on copper demand and the outlook of copper demand. And in my presentation, I will also go into a very particular subject, the substitution, which is a way of adjusting copper demand in order to balance markets. Of course, we have the usual disclaimer, and this presentation includes any forward-looking statements which are based on assumptions which might prove to be incorrect in the future. And the DMM Advisory Group is warning against making business decisions solely based on the information included in this presentation. So what are the key drivers of copper demand? Of course, the most obvious one is population growth, and the Earth population is expected to grow by 1% per annum between 2020 and 2026. And of course, the growing population will need to purchase additional goods and services, and all these goods will include copper. In addition to this, the population is striving to become more wealthy and use more electric devices, appliances, more other products, which again use copper. Now, how this impacts the GDP and industrial production? The global GDP is expected to grow between 2020 and 2026 by 6.4% per annum. And this is the IMF's forecast. That even if we deduct the post-COVID recovery, the growth rate is 5.4, which is again very attractive. And if we compare this 6.4% GDP, annual GDP growth with the previous period GDP growth, which was 2.2%, you can see that the world production, industrial production, and the GDP is strongly growing compared to the past. And the majority of this product produced will need to use copper for electrical and non-electrical components. Of course, post-COVID, the fiscal and monetary stimulus was implemented by a number of governments, and many of these policies are focusing on copper-intensive sectors, such as infrastructure, housing, but also the general revival of the economy. And even infrastructure projects are long-term and will have an impact in the coming years. One part of the expansionary fiscal policy is also the focus on green transition to meet carbon reduction and emission targets. And these targets are only be able to achieve if thermal electricity generation is replaced by renewable energy generation. Internal combustion engine vehicles are replaced by electric or hydrogen vehicles. And also the increased use of smart systems to optimize energy consumption. And I come to these aspects on my next slide. Green transition. Why is it positive for copper demand? For example, renewable energy. Renewable energy generation is using much more copper than the traditional thermal and nuclear energy generation. For example, solar panels need to be connected by cables. There is an inverter to convert the DC current into AC current. Also, the wind towers have generators in it, which use copper bonding wire. The wind towers need to be connected. If it's an offshore wind park, then the connections are submarine cables using, again, copper. This sites, the renewable energy generation is generally further away for the consumption than it is the case for thermal and nuclear energy. So wind energy generation offshore is up in the sea, and this has to be connected to the grid. And this connection, especially if it's an underground or submarine, has a higher chance to be copper. Also, energy storage is required because renewable energy generation is intermittent, and energy storage will use copper as well. Now, the increased electricity use need to be transmitted and distributed to the users. And the electrical grid needs to be expanded and on the reliance tested. This applies to both the developing nations and also the developed countries. And in developing countries, of course, it's the expansion is the focus. In the developed countries is more the upgrade of the electricity infrastructure for reliance. But also in this system, the electricity transmission and distribution system, energy storage is required for peak consumption, and local grids all using copper. Electrical mobility and charging infrastructure is again an important aspect. And electric vehicles, compared to the internal combustion engine, use high performance electric motors in using copper winding wires, sometimes even 2 electrical motors for high performance. But there's also other electrical components are in, and also non-electrical components are in electric vehicles using either copper or copper alloys. Also, the local electric vehicle charging infrastructures will be based mainly on copper, and fast charging point, again, using copper. Smart solutions is another trend, and they include increased use of computerized systems, signal cables, and so on. And these smart systems reduce electricity consumption and optimize electricity use. But also smart manufacturing is using robots, again, using copper and equipment wiring in electrical motors and other components. But also other components are using copper, such as copper heat exchanger, precision casting alloys. Now, the next slide shows the forecast of copper semis end use. And we expect, after a decline in 2020, a strong growth in 2021 and 22, driven by the expansionary monetary and fiscal stimulus and green transition. From 2023 onwards, we expect mainly the green transition will drive the demand, the copper semis end use, and with a growth rate which is slightly lower, but historically still very attractive. And of course, as you can see, China is and remain the major market, major demand, major source of demand for copper semis end use. Now, I mentioned substitution, and substitution is a way of balancing demand. But how substitution works? Increasing and volatile raw material prices create significant issues for OEMs and appliance manufacturers. And this is very easy to understand that if the input prices are volatile and increasing, then these companies have planning uncertainty about existing products, but also about new designs. And consumer price points for the final products are generally inflexible because the market is highly competitive, and increased material costs are very often have to be absorbed into the margins of OEMs and manufacturers. Therefore, it's a problem for the manufacturing sector. So why and how substitution happens? Copper is used for these applications, for a good reason, because it's the best material for the purpose. And any substitution needs to offer significant and long-term advantages to justify this substitution. Now, substituting an alternative material, copper with an alternative material, is not a straightforward process. Alternative materials have different specs, different characteristics, and the product design and the production process have to be adjusted accordingly. And it means further investments into the new product design, into the production process. And these investments have to be justified by the advantages of substitution. So substitution happens mainly in two main reasons, for two reasons. The one is if alternative materials bring significant cost advantages of the total project costs without compromising performance and quality. And this can happen for some power cables where the material of the conductor, copper, is a large share of the total project. On the other hand, for example, for construction, building wires, the very thin electrical wiring in the buildings is a very small percentage of the total construction cost, and the motivation, besides the building codes, the motivation to substitute building wires is relatively low. Substitution also happens where alternative materials bring additional further benefits in addition to the lower cost. For example, lighter weight in some automotive applications, where the lighter weight translates in higher fuel efficiency of the vehicles. or reduce cost of installation. For example, for some plumbing tubes, the plastics plumbing tubes are reducing the cost of installation if the installation is relatively straightforward and simple. Now, the extent of substitution in 2020 was low and stable. It was 0.95% of copper use, and it was on the back of, at the time, relatively low copper material cost. Based on the increased copper material cost, we expect a higher substitution in 2021. However, parallel to the increasing copper material cost, also the cost of alternative materials like aluminium and steel, they have also increased in 2021. And we come to a strange situation where copper material costs are high, but compared to the alternative materials are still offering a very good value. And I come to this on the next slide. The next chart shows the green line is the copper aluminium price ratio, and this is one of the key drivers of substitution. The blue is the price ratio between copper and steel rebar, and the red line is a net substitution. And you can see visually, but also the correlation analysis bring out a relatively strong correlation between the green and the red lines. But you can see that the green line has risen in 2020, but in the most recent months, in 2021, has fallen between 3.5, which is regarded as a soft threshold of substitution. As I said before, because not only the copper material costs have risen, but also the aluminium. So we expect from 2022 a slower substitution, because copper becoming not just the best material for use, but also relatively good value. The next slide shows the extent of substitution and the four substitution forecasts, and explaining the columns. The red is the substitution. This is the lost copper use to alternative materials. The blue, this is the gained copper use from alternative materials, and this can happen, for example, undergrounding. The overhead lines, which tend to be almost all of them aluminium, are becoming underground lines, and the share of copper conductor use in aluminium lines are much higher. Some countries even legislate that underground lines, underground cables to be copper. And this is represented by the blue part of the chart. And the purple is miniaturization, where products are becoming smaller, and instead of using less copper, they reduce the amount of copper used in these products. So this is the loss of copper use due to this development. And the green line is the net substitution, the sum of the blue and the red columns as a percentage of the copper use. And you can see that in 2021, substitution is expected to peak, but slowly decline in the coming years. And the next slide is a very interesting slide, which shows on the horizontal X is the expected future growth of copper use on the markets. And the vertical X, you see the extent of substitution as a net substitution loss as a percentage of the copper use. And the size of the bubble is the market size of certain copper semi-products. And the larger the bubble, the larger the market. For example, power cables and building wires are large markets. And you can see all the larger bubbles are in the upper right-hand corner of the matrix, which is low substitution and growth of the market. There's some odd ones out, but this slide shows you a very good overview of the majority of the copper applications are growing and are characterized by a lower substitution. And this is from me. Thank you very much.
Thank you, Christina. So I wanted to touch on the demand side to start off with of your presentation. Obviously, last week we had the COP summit, and it was a fairly shock, or I don't know if it was that much of a shock, but Russia and China decided not to attend the conference. And we also heard in the first week of the conference that India were extending their net zero goals from 2050 to 2070. It seemed like, especially with the media, it seemed like a blow to the Western countries that are obviously pushing for this net zero by 2050 and really going for this. I guess in light of that, and if there is a risk of China and potentially Russia and India slowing down their net zero ambitions, is this going to affect the copper demand side of things moving forward? If obviously it's going to take a while for them to hit their goals that the Western countries are all ambitioning for, I'm assuming that the amount of copper required might reduce. Is that right?
Of course, the majority of the developed countries committed by 2050, China committed by 2060 to reach carbon neutrality. And I think it's important to see that these countries have just a longer way to go to achieve these targets. So it doesn't mean that the annual activity to implement green transition projects will be lower. They just have a longer way to go. And a very good example, China, which is one of the which is half of the market basically of copper. What kind of activities what kind of legislations they implemented to reach carbon neutrality? For example, they banned coal energy generation around cities. Also, electric vehicle sales skyrocketed in 2021 in China. And for example, we can't imagine in a Western world, in China, there are 200 models of electric vehicles available to consumers. This is enormous. Also, they committed, so the target is 20% of new vehicle sales should be hybrid or electric vehicles by 2025. So these targets are, and these are already in place. Also, China is on the forefront of renewable energy generation and innovation in renewable energy generation. For example, they legislated the energy storage targets for China, and which will be implemented on a provincial level. And these are all relative proactive activities of China, although they have not attended the conference, but it doesn't mean that they are not active in this area.
Great. And just to follow up on that as well, something I wanted to add was, are we entering a copper bull market at the moment, do you think, Christina? I
think based on the green transition and the point that the green transition is requiring more copper than the industries having used copper in the past, I think there will be an increased demand for copper. And if you characterize this as a bull market, then I would agree. But I would rather just say it will be an increased demand for copper in the future. So it also depends on supply and on other factors, of course.
Okay. Well, on supply, Colin, obviously you had a couple of slides on the supply forecasts coming out from either expansion or new discoveries in the industry. One of the things I wanted to touch on, because it does link obviously with demand fairly significantly, of course, is we've been seeing, I guess, at least for the last 20 years, that some of the world's largest mines, especially those in sort of Chile and Indonesia, have been reducing their cutoff grades. And obviously that means that usually that when they're low grading, that one would assume that there is a sell-by date on some of these large copper mines that have been in production for many decades. Do you think with the slides that you had there, with the new projects coming forward, are there enough new discoveries or expansion projects to really make up for perhaps some of the shortfall in supply that we may see as these if these longer life mines are coming towards an end? And secondly, with the demand that Christina's talking about here, is there enough supply moving forward really for there to be enough copper in the market without it sort of going a bit silly?
Well, one way of looking at this is that historically the supply-demand balance through the year has gone from, say, 250,000 tons in deficit to 250,000 tons to the positive. And so seasonally and sort of through the year, it kind of goes backwards and forwards. So and that's just, less than 1% of the market where those figures, those deficit figures are heading, and they seem big, 250,000 tons, but on a demand market of 29-30 million tons, it's actually relatively small. So the history tells us that the deficit goes away, the market becomes balanced. And as you say, looking at the amount of sort of capacity that's being worked on, I would have thought something like it depends, I suppose, on which kind of time frame you choose, but the kind of the shorter the time frame, I suppose, the less of the issue. It's one issue is that we're relying on mining organizations to invest, and they do invest heavily in in exploration and capacity, and getting as much material out as we can. So it has to be profitable, and you'd have to say as well that it's very difficult in regards to regulation sometimes to even expand a mine, and there's a lot of paperwork and a lot of time, and I can also say that even, for example, if you wanted to try and increase recycling, to set up a recycling facility takes a long time and is very tricky to do. So on the one hand, the regulators, know that we need material, to come through the system. But on the other hand, it's reasonably tricky to set these things up. So it doesn't really sort of answer the question, but where we will actually be in 20 or 30 years' time, I think is really anybody's guess.
Right. But in your prediction at the moment for the short term, say within the next 5 years or so, are we going to be in a situation where there is just genuinely not enough supply at whatsoever to meet demand, and we've got issues, or is it not as bad as what's?
No, I mean, I wouldn't be able to comment on that, but I think what we've seen from the slides, I think it seems like there's a lot of activity. So that's really as far as I can go.
All right, thank you. Christina, back to you again. I wanted to talk to you about this EV side of demand that's being forecast at the moment. One of the other sides, or one of the other options that potentially might be available to people moving forward is hydrogen, and hydrogen fuel celled cars are something that is gaining in popularity, even if it is more of a talking point at the moment. Is there a chance that the hydrogen economy could pick up anytime soon? And if so, what would that look like in regards to copper, if that impact has a negative effect on the demand forecast for EVs in particular?
Of course, hydrogen and fuel cell cars is an alternative to electric vehicles, definitely. And they are not just a talking point, they are already a reality, especially for larger vehicles, buses, trucks, and mainly in Far East and especially in Korea. The hydrogen fuel has at the moment a stronger energy density than the battery vehicles. Therefore, they are very good for vehicles which need performance, such as trucks, such as buses. Charging infrastructure is still limited. But electric vehicles and the change from internal combustion engine to electric vehicles is legislated. It's legislated in a number of jurisdictions. So there will be an electric vehicle market. There is no question about it. It will be definitely in the future shared with hydrogen. But in terms of impact of copper demand, hydrogen and fuel cells vehicles also require an electric motor and a battery. slightly smaller battery, but still the copper demand will be the difference between the copper demand of electric vehicles and the hydrogen chain vehicles is not as much as it might be seemingly at the very beginning. Yeah.
Brilliant. Well, we'll end it there for today, but Christina and Colin, thank you again for taking the time to come on and join us. As always, I will be placing links for DMM Advisory and the International Copper Association in the links below. I highly recommend, if you are interested in finding out a bit more about the industry and in particular copper, check that out.